let me turn to a different aspect of financial stability that is more long-standing, stretching back to the global financial crisis. So, as you know, partly in response to that financial crisis, the UK has implemented a ring fence to separate its own retail banking from the broader international business that some of the banks do. And in the United States, same problem but different response. The Dodd-Frank Act had a different impact on the activities that banks could undertake. How has Ghana responded to the global financial crisis? Is any of these sort of policy moves appropriate in your context?
Well, thank you, John. So fortunately, before the onset of the pandemic, Ghana had adopted very important regulatory measures to strengthen financial stability. And this is really learning from the lessons of the global financial crisis. So in the year 2016, we passed a new banking law, basically along the lines of international best practices that gave the central bank a lot more powers for what is called early intervention. Or some would call it prompt corrective action. Basically, a host of very intrusive powers that allows the central bank to step in when it finds early signs of distress, as part of its supervisory processes. And so these powers were given to the central bank, as well as even more intrusive powers to resolve non-viable and failed institutions. So we got a host of early intervention and resolution crisis management powers under the 2016 banking law. And so these sort of positioned the central bank with the tools to be able to manage crisis. Now, that was tested very quickly because in August 2017, the central bank had to resolve 2 failed banks. And then in the 2 years that followed, it had to resolve another 7 banks and then a host of other smaller failed financial institutions. So we're really grateful that the powers were in place before the need arose to use them. And in addition to that, we've undertaken a lot of reforms, including putting in place a deposit insurance scheme, putting in place a stronger liquidity assistance tool to support the banking industry in a way that does not sort of impair our balance sheet as a central bank, right? And then we have, as a nation, we've put in place a Financial Stability Council, which is made up of not only the central bank, which is the banking regulator, it has the insurance regulator, it has the securities market regulator, it has a pensions regulator, and then it has the Ministry of Finance, which is your chancery, and then it also has the deposit insurance scheme as a member. So this is really like a body of entities, all with a vested interest in the financial sector, and the mandate is really to strengthen regulatory cooperation, is together to identify and mitigate systemic risks. And then it is together as key stakeholders in the financial sector to prepare for crisis. So make sure there's a crisis preparedness framework that helps deal with crisis across the financial sector. So these are some of the measures we put in place to ensure that our financial system is strong and resilient. And if there are signs of distress or failure, we're able very quickly to step in to ensure an orderly exit of failed institutions in a way that promotes financial stability.